Welcome, Alex Morsing from Equivesto. Welcome, Alex.
Hi, Craig. Thanks for having me. Thank you, everyone, for joining us. Today is talking about what actually is equity crowdfunding and specifically how does that kind of fit in Canada. Many of you have probably heard of a few other kinds of crowdfunding before, specifically donation-based or rewards-based crowdfunding. As the name suggests, donation is giving the funds in exchange just to support the cause or the business or the individual without getting anything in return. And reward-based is sort of like a Kickstarter model where you're putting in the funds and you're getting back a t-shirt, or you're able to pre-order the product or something like that. And so both of those models are quite successful internationally, and we've heard the names of many of the platforms that offer that. Equity crowdfunding is a little bit newer, and it's actually an opportunity where in exchange for the money you're giving to support the company, you're actually getting shares there in the business. So that's an exciting new development. But because you're issuing shares to the investors, there's a considerable change in the registration and the sort of legality around the whole process. So we'll talk about that as well today. So let's talk about the basics of equity crowdfunding and essentially how it works. So just like other models of crowdfunding, the idea is to grab a large pool of individuals and allow them to invest smaller amounts directly into your business. And in exchange, they get shares of your company. There's also a lending version of this, which is often called peer-to-peer lending. But that's not what I'll be discussing today. The focus of today is on equity crowdfunding. And so you're getting equity shares in exchange for your investment. And then the platform acts as the sort of middle of that and essentially helps connect the two groups, the companies looking to raise the capital and the investors looking to support the company and put in some funds. So as I mentioned, investors do actually get shares. So this is a big change from traditional types of funding, and so the other types of crowdfunding. And the companies themselves can actually choose the type of shares that they want to issue when they're taking part in an equity crowdfunding campaign. I'll talk about sort of the shares that we might recommend, or the most frequently type of shares that are issued, but companies do have the right to choose, and the investors are getting partial ownership shares in the company itself. And as I mentioned, they're often non-voting common shares. So that helps the investors participate and own the shares and become partial owners, but it helps keep the control and management of the business with the existing founding shareholders. So where does equity crowdfunding sort of fit in the capital life cycle in Canada? So equity crowdfunding lets you raise up to 1.5 million per year for your startup. And so because of that cap in the maximum raise amount, it fits right in between the sort of family and friends round, which would come at the beginning where you're getting started and you really only have a concept, and the angel investors and the venture capitalists that come later on when you're raising, multiple millions. The angel investor round and equity crowdfunding does overlap for some of the larger crowdfunding raises, and you can go to either of those options for capital. But equity crowdfunding is really to help companies who are, you have your idea, you've built it out, you have a demo version of your product, and you're looking to get that first boost of capital and sort of make that launch and start generating some solid revenue. That's sort of where equity crowdfunding fits there. So I'm going to spend most of the time talking about equity crowdfunding and where that fits in Canada, but I wanted to give you a bit of a picture of what it looks like internationally as well. So while equity crowdfunding is relatively new in Canada, around the world, it's been in existence for some time. So in Israel, in the United States, and in the United Kingdom, equity crowdfunding is getting more and more established. It's been legal for almost 10 years in some of those places, and there's definitely a lot of interest, and there's been many successful raises. One example that we like to use of a company doing equity crowdfunding well in the UK is Crowdcube. So Crowdcube has been in existence for about 8 years, and well, actually this is a little bit old. The information is always changing every single day, but they've raised well over 500 million pounds for companies, and they've got almost 700,000 registered users, and they've raised for hundreds of companies over that period. So you can see that internationally, you know, the UK, the US, Israel, many other countries are really embracing equity crowdfunding. It's still relatively new in Canada, and so we're still trying to, you know, build that interest and let the market develop a little bit more, and hopefully it will grow and become more frequently used. So how does equity crowdfunding fit in Canada? So before going into specifically equity crowdfunding, I wanted to talk a little bit about sort of the Canadian sort of innovation space and the startup space and sort of what that looks like. So in general, Canadian investors are a little bit more conservative than investors in the United States, the UK, and other areas. And so there's a little bit less capital going to startups, and it's usually given at a bit of a later stage. So there's sort of a bit of a gap between that family and friends round that I talked about and, you know, the angel VC rounds where companies do need access to capital at this stage, but there's not as much capital on offer for those sort of earlier, higher risk companies. However, on the flip side, there's definitely still a lot of innovative and exciting Canadian small businesses. You know, small businesses are really the driver of the economy, and more startups help build the economy and make it much stronger. There's also a lot of other funding options beyond just issuing shares to investors. So you can always go to banks for funding or through grants, but there's not as much capital available in Canada for sort of smaller businesses as there would be in the US or the UK. Let's talk about the history of equity crowdfunding and the rule changes that sort of allowed that to take place. So as I already mentioned, Canadian investors are a little bit shorter term in their focus, and there's not as much interest in higher risk companies like startups, though there is still some strong interest. And there's a lot of individuals who do, however, want to support and back exciting and innovative companies. And now with the change in the rules that allow equity crowdfunding, that is possible since 2016. So in 2016, the rules changed to allow equity crowdfunding. Everyone keeps saying that. I've said that a few times in this presentation. What does that really mean? So in Canada, securities are regulated by each province individually. So we're in Ontario, and the Ontario Securities Regulator is the Ontario Securities Commission. So all securities are regulated by the OSC in Ontario, not just public securities. So even if you're going out to raise capital from investors privately, technically the way that you're issuing that equity and attracting those investors is technically regulated and covered by the Ontario Securities Commission. When a company goes public and issues on a stock exchange, they use a legal document called a prospectus to essentially outline the full details of their business and present this to the general public. And it has all sorts of disclosures and additional information there. And that helps provide all the information that's necessary for the regulator to review and sort of assess they're offering. Private companies which aren't listing on a stock exchange can't meet the huge burden of creating a prospectus, and all the hundreds of thousands of dollars of costs related to building such a large and extensive document. And so we use what are called prospectus exemptions to avoid the requirement of issuing a full prospectus, but still able to raise capital. So even when you've gone out and raised money for your business privately, you've technically been using a prospectus exemption even if you haven't known it. There's an exemption called the private issuer exemption, which essentially allows businesses to go and raise capital from high net worth individuals and friends and family of the founders without needing to file any documentation or have any documents. And essentially, that's what all of us have been using to raise capital up until this point through traditional VC or angel investor funding. So even though we haven't known it, we've technically been regulated by the OSC this entire time. With equity crowdfunding, however, you can't use that private issuer exemption. And so in 2016, the OSC released what's called the crowdfunding exemption. So this was a new exemption that was created that created some new rules allowing companies to use equity crowdfunding to raise capital. But there are some restrictions around that, which we can talk about more. One additional challenge of having individual securities regulators in each province means that they don't always agree on what the rules look like. So currently, equity crowdfunding isn't even legal in every province and territory in Canada. Only certain provinces actually allow equity crowdfunding, and the rules for what is required, the maximum amount that can be raised, and the disclosure that's needed as part of equity crowdfunding is actually different in some of the different provinces that actually allow equity crowdfunding. So it's not even like you could go to BC and BC would have the same rules as Ontario, even though they both allow equity crowdfunding. However, which is really great news, all of the regulators are actually getting together and will potentially be releasing one unified set of equity crowdfunding rules that would cover all of their individual jurisdictions in Canada, which would potentially be released in 2021. But the regulators do take their time to make sure that they're able to meet with all the different stakeholders and understand the full implications of their new rules. And so I wouldn't necessarily hold my breath for the release of those rules right when we might want them to, but it's still a really great step that they are doing this. But currently, they're still quite fragmented by province. So who can actually participate as an investor in equity crowdfunding? Essentially, equity crowdfunding segments investors into two piles and has different rules and restrictions for each of those two piles. Traditionally, investors who could be participating in private startup investments like angel investors, like venture capitalists, they're categorized as what's called accredited investors. So they are high net worth individuals or companies with over $1 million in financial or investable assets, excluding their home. So that's how you determine what an accredited investor is, regardless of the prospectus exemption that you'll be using. So accredited investors are allowed to participate in equity crowdfunding, but both types of investors, even also accredited investors, do have maximum investment limits under equity crowdfunding. That is included in the rules provided by the regulator. So the maximum investment per accredited investor per company is $25,000, and the maximum investments per year in all equity crowdfunding deals is $50,000. So the second bucket of investors, the most exciting bucket, the new bucket that is really why I think we're all here, is the retail investors. So essentially, there's no financial restrictions around being a retail investor for equity crowdfunding. As long as you're the age of majority, so you're over 18, you're actually eligible to participate in equity crowdfunding. And you still have investment limits as well, of course. So for retail investors, the maximum investment per company per year is $2,500, and the maximum investments in equity crowdfunding for the entire year is $10,000. And the idea behind these limits is so that the government and the regulators can make sure that individuals are not sort of overexposing themselves to higher risk, though higher potential, but definitely still higher risk investment opportunities. There's some concern that individuals would, put companies up that would be really exciting and really innovative and would really entice people to participate. And there would be, without limits like this, there would be potential for someone to, get very excited in an idea, put too much money into that company, and for whatever reason, if the company wasn't successful, then that person would have lost a lot of money. So because retail investors aren't the accredited investors, they don't have that $1 million of investable assets, the feeling is we want to make sure that these people are limited so that even if everything is lost that they invested through equity crowdfunding, they still are financially secure. They haven't, remortgaged their house or lost their shirt investing in equity crowdfunding. And the onus is actually on the platforms themselves, the regulated platforms, to take the time to review each investor when they're signing up and to make sure that equity crowdfunding is suitable for that person. They understand the risks involved and they are comfortable with and understand the right amounts that they should be investing for their own individual scenario. And so that's a responsibility that the platforms take very seriously. So the other side, the companies, who can participate in equity crowdfunding? So as I mentioned, the maximum raise using the equity crowdfunding exemption is 1.5 million each year. So each calendar year, companies can raise up to the 1.5 million. The companies do need to be, based in Canada, and we highly recommend that they're incorporated. Technically, the company could be a partnership. It wouldn't necessarily need to be incorporated, but that can make things very complicated. So we would highly recommend that the business be incorporated as opposed to a partnership. With equity crowdfunding, and specifically using the crowdfunding exemption, it's possible to raise without using audited statements. Using other exemptions and certainly issuing a prospectus and going public, companies are required to provide audited annual financial statements. But with the equity crowdfunding, it's possible to use only accountant prepared notice to reader statements. And so they're much cheaper to prepare. Usually they're actually prepared by most of us as part of just our annual tax filing anyways. And so the burden in terms of cost and time to prepare is much less because it's possible to use the notice to reader statements. Generally, companies are also required to have basically a minimum viable product or a demo version of their product or service before raising, but they don't need to have revenue. So you can't just come with an idea. If you just have an idea, then you should actually go and work with Craig on his ideation workshop and make sure you have product market fit and all that stuff. Once you've got that, you've actually built your service or your product to a sort of demonstrable point. That's a great opportunity to consider equity crowdfunding. What are the ongoing requirements? So I've done all this work. I'm thinking about equity crowdfunding, but I'm worried about what I'm going to need to do after equity crowdfunding. I've got all these new shareholders now. What does that look like? So in terms of ongoing requirements, essentially there are some new requirements compared to before, but they're not as intense or strenuous as we might think. So already, as required by regulation, you need to have an annual shareholders meeting. that's already a requirement. So that requirement stays after you've run an equity crowdfunding round. You would need to invite all of the shareholders to that meeting, but we would recommend you sort of do it by webinar, just like this. You create a presentation, and you don't necessarily allow immediate sort of engagement and discussion during the meeting. You could open it for questions afterwards, but you would need to have an annual shareholders meeting. You also need to continue to provide those accountant prepared financial statements each year. And you would generally, as I mentioned, prepare those as part of your tax filing anyways. So that's not a massive additional burden. Often you can have those prepared for a few $1,000s, much less than audited statements, which can cost starting at $25,000. So much less, usually less than $5,000 Canadian. Then you also need to provide those to the shareholders, which you would need to do generally as per your existing shareholders agreement. So you would do that as part of your annual shareholders meeting. And you also need to update the securities regulator and your existing shareholders if you're raising capital in the future, or if there's been a large change in business operations. For example, you've done a massive pivot, or you decided to shut down the business or anything like that. So there isn't a sort of massive additional amount of work that's required after doing an equity crowdfunding round. In other future presentations, we'll talk about sort of what we recommend you do to sort of help stay connected with your shareholders and everything, but the requirements are not extremely strenuous. Which businesses work best for equity crowdfunding? So as I'm sure you can sort of surmise, equity crowdfunding is really about allowing the crowd to participate in investing in your business. And really, the more that you can captivate and bring in that crowd, the more successful your round will be. So often businesses that already have a strong community focus, like restaurants, shops, or community centers, are already positioned well where they have an active community that are interested in participating and sort of supporting them. Also, having an exciting idea that captures the imagination, that is also a really great sort of business model that's going to work well with equity crowdfunding. If you have a lot of followers and social connections already, that's definitely going to be an asset, but that's not something that's required when going out to do equity crowdfunding. As long as you have an idea that's exciting and you can really sort of capture the imaginations of people, that's really going to help. It doesn't need to be actually a consumer-focused business. It's possible to do equity crowdfunding even if you have a business, a B2B model. It's just important that you frame your idea and your concept, emphasizing the sort of positive impact of it and the innovative approach. Companies that don't work as well for equity crowdfunding are companies where the value of the business is tied to a small number of employees. For example, if you have a consulting firm, it's a bit harder to go and equity crowdfund that kind of business, because if you and those key employees were to leave and sell your shares, there isn't a lot of intrinsic value remaining in the business. So a business model where the business itself has some considerable intellectual property or IP, that's really helpful for equity crowdfunding. Again, Craig has some great presentations with, I believe, Alex from Insight Legal about IP and preparing, understanding IP law and everything. So definitely check back with Craig on that. So also, businesses that won't necessarily work as well is if you are a sort of highly technical B2B focused business model. So as the business is more technical and less sort of easy to explain to the general public, it may be less successful with equity crowdfunding, but that's not any sort of guarantee. So it still might work, but you're not in as positive a position as a company that already has a strong sort of community focus. how can I get started with equity crowdfunding? This has been an interesting presentation and it seems useful. So, okay, I want to get involved. What are the sort of next steps? So the first thing would be to make sure to prepare and have your documentation ready about your business. And I'll talk actually about that on the next slide. Also, you want to think about how to present and frame your business. You want to have a clear plan around how you can emphasize the positive impact of your business. You can make it approachable and just a great story that people want to connect with and want to follow what you're up to. And then you can also use that story to build and grow your community. So connecting with individuals, your customers, your suppliers, people who live and work near you, friends, people who are excited by what you're doing, who want to follow along, who want to get involved. Building that community online definitely is a great way to prepare for a crowdfunding campaign, because each one of those individuals is a potential future investor. The next step would be to review the requirements. So different equity crowdfunding platforms, and depending on the jurisdiction you're in, will have different requirements to apply and potentially list on their platforms. So I definitely recommend, once you've sort of built your business and you're growing your community, to have a look at what those requirements are and do some of the preparations for those requirements. And then of course, you can just apply to any of the platforms to find one that fits for you. So I've mentioned reviewing the requirements, and I've mentioned preparing documentation, but what is the documentation? So for Equivesto, this is a list of documents that we would like you to have ready when coming to talk to us about equity crowdfunding. So your certificate of incorporation, your capitalization table, your organizational chart if there's multiple businesses, your business plan, a pitch deck, financial statements, so those notice to reader financial statements that we mentioned earlier, your shareholders agreement, your financial projections, 5 years is usually what we'd like to see, and an outline of the amount you'd like to raise on equity crowdfunding and the purpose of those funds. So that sort of covers the list of documents that we would like to see when someone's applying to us. We'll also work with you to, ask more questions and build out your story and gathering more information as part of our due diligence process. But this is the great stuff to have before coming in and talking to us. You can learn more about all of these things at equivesto.com/learn. Thank you very much for listening, and I'm looking forward to going through all of your questions.
I wanted to ask a question. If you do have no investors to bring to the platform, is it even worth while to do crowdfunding?
If you don't know a single person who is interested or excited by the company that you're working on and things like that, it's mostly likely that even when you speak to an equity crowdfunding platform, before they even let you sign up or do anything like that, they would probably tell you that you probably want to grow your community and your social presence first before trying to run a campaign.
Now, having said that, I also believe that people can use equity crowdfunding as a growth
Definitely.
initiative, meaning that if you can start gathering community around a cause or a product or a thing that you're offering, and they'll invest. They're willing to give you $100 or $1,000, and you can get 1,000 of those people investing in you. Those are going to be your evangelists. Equity crowdfunding is a great way to determine the crowd and build that community and get that loyalty for your earliest adopters. Thanks again for taking the time today, Alex, and we'll talk to you soon.
Thanks, Craig.